to another MBS Highway live webinar. I'm your host, Megan Anderson, along with Barry Habib. And today's guest honestly needs no introduction. You see him every morning on the MBS Highway morning update video. And in fact, he's been in the industry for over 15 years. Along that time frame, he's won many awards, some of which being top 40 under 40 from National Mortgage Professional Magazine, as well as Housing Wire's Rising Star Award. Now, he's the head market analysis and chief revenue officer at Highway. He's also the co-founder of Crypto Charged, a platform designed to educate investors of the crypto markets to help them make better informed investment decisions. And today he's going to help us understand crypto and its opportunities. Without further ado, join me in welcoming Dan Habib.
Hey, yeah.
Thank you, Megan. Appreciate that. Hey, everybody. Great to be with you guys. Excited to talk about today's topic, cryptocurrency. Many of you have requested that we do something like this, so wanted to make sure that we did tackle this. Now, listen, in today's talk, going to be going over some basics, going to go over Bitcoin, what actually is it, some of my favorite cryptocurrencies, some of my personal top holdings, what I think is important as far as targets. We're going to talk about how you can buy crypto, how you can keep your crypto safe. Going to talk a little bit about how crypto may influence home values. So there's a lot we're going to go over, but I just want to be clear at the beginning here that this is not financial advice. This is just us trying to give you some of our personal and humble opinions and insights, but is not meant to be construed as financial advice. So great to be with all you guys. And let's jump right into it. Cryptocurrency certainly is one of the latest crazes out there, right? I mean, over the last 10 years, it has been the best performing asset class. In my opinion, I think it's going to also be the best performing asset class over the next 10 years. You're probably seeing in the media, Bitcoin above 100,000, just setting a new all-time high on Inauguration Day yesterday, a little over 109,000, almost 109,500. And you actually saw President Trump launch a coin called the Trump coin. And you also had Melania Trump issue a meme coin as well. So clearly this stuff is going mainstream. Been a lot of attention out there in the media. So let's break some of this stuff down, because cryptocurrency, it can be a little bit mystic, hard to understand and comprehend. And boy, I see a lot of people investing in things and they don't even know what they're investing in. And I think as a rule, it's always important to have an understanding in the different coins or the different investments that you're investing in, because the truth of the matter is now there are thousands and thousands, I think it's like over 30,000 different types of cryptocurrencies out there that you can invest in, but many of them are not really good options. Many of them are scam coins, where it's a pump and dump type scheme where they pull the rug under you. Latest numbers I saw was about 25% of them would fall into that category. So you have to be careful. Now, don't get me wrong. There's things you can invest in and make a lot of money, but it doesn't have any what's called in the crypto world utility or any purpose behind the coin. It doesn't do anything. Now, there are several that I think are exciting opportunities that are actually serving a valuable purpose in our economy. So let's first talk about Bitcoin, because Bitcoin is by far the largest cryptocurrency out there by market cap. It's kind of like the grandfather of crypto. And oftentimes the way of Bitcoin kind of goes the rest of the crypto market. So Bitcoin was really introduced around 2009. Nobody knows for sure who the creator was, but this is a protocol that was created that really cannot be changed. And Bitcoin, the whole kind of premise behind it is that it is a decentralized cryptocurrency. So what does that mean? Well, most things in our economy are centralized. So we use what's called fiat currency, right? That is what the dollar is. And fiat currency, back in the day, if you remember, we were on the gold standard. It was actually backed by physical gold. Well, not anymore. Now it is backed by the full faith and credit of the United States government. And most currencies around the world are fiat currencies. So it is completely centralized. You have the government and the Fed, the central bank, literally controlling the money supply. As I mentioned, it's not backed by any physical assets. And of course, we know it's not limited in quantity. You can print or digitally print it nowadays as much currency as you want. And of course, when that occurs and you have the money supply increasing, well, that devalues the dollar and causes inflation. So there's some very big differences with Bitcoin. Bitcoin is a finite asset and it's digital, but most assets now, or I should say most currencies they're spent digitally in most cases, right? You're using PayPal, you're using credit cards, Venmo. All of this is done through your phone digitally, but it's all predicated on a dollar value. And when you take a look at any transactions that you're doing, you need these centralized institutions to make the transactions work. You are the card holder, let's say, right? Let's say you're using your debit card or your credit card, and you go to a store to buy something. Well, they then have to go to the third-party processor. They got to go to the bank, make sure you have the funds that you say you have, and then it all comes back, and it's like, okay, we can approve this purchase. So you need centralized finance institutions in all of our transactions that we're doing with fiat currency. Now, the big difference with Bitcoin specifically is you can do these transactions without the need for any middleman. So it's peer-to-peer network. You don't need any kind of centralized government. It operates almost like a cash transaction, and you really have complete control of your money if you choose to do so. Meaning you don't have to put your money in a bank where, hey, listen, we've heard of crazy things happening where you can have accounts frozen and such, where you actually can take self-custody of the coins and you don't need any third party to help you facilitate transactions. And in many cases, you can send it quicker and anywhere in the world using cryptocurrency. So a lot of people are a little confused about how it all works. Let's say specifically with Bitcoin, and it does work in the blockchain, which is like a transparent global ledger that everybody can see, unlike a bank's ledger, which is behind a privacy wall. And the Bitcoin network is probably the most powerful network in the world. There is millions and millions and millions of computers plugged into this network. And these plugged in computers are essentially verifying all of the transactions on this global ledger, and they're keeping it secure. And you've probably heard the term miners, and miners are essentially these computers plugged into the network that are keeping the ledger secure and verifying transactions, because the byproduct of mining is you get Bitcoin. And that is the only way that Bitcoin comes into circulation. So whoever solves, to keep this simple, the hash function math problem using your computing power is rewarded in actual Bitcoin. And that reward of Bitcoin is the only way that you get new Bitcoin coming into circulation. Now, there's no central authority that can print more Bitcoin. The crypto Bitcoin specifically protocol, it's immutable. You cannot change what is, I think, one of the most exciting parts about Bitcoin, in that there is a 21 million finite supply and there can never be any more. And rough numbers right now, how many Bitcoin have been created? About 19,934,000, let's call it, of the 21 million ever. So it is an extremely scarce asset, which is one of the reasons why it has a lot of value. You could compare it almost to a digital gold, in that gold, it is a natural resource. There's only a certain amount of it that can be extracted from the earth, and it's very expensive to actually go ahead and extract it. So that's one of the reasons why gold has a lot of value. Bitcoin shares some of those similar properties or principles, except it is even more finite. So cryptocurrency has been on the rise. You guys have seen Bitcoin and other cryptocurrencies really taking off. Why? Why have we been seeing this go up so much, and why has there been so much wealth created? Well, as I mentioned, it's been the best performing asset class since just the beginning of 2024. So a little over a year, you've seen $2 trillion in wealth that has been created. And just over the last 2 months, about 1.6 trillion. Now, I'm going to talk to you guys a little bit about some forecasts that I have where I think there's going to be a lot more wealth created this year, and how that may influence things like real estate and home values. Now, let's talk about some of the catalysts that have really helped cryptocurrency. Number one, well, we have a much friendlier regulatory environment because President Trump, who was just inaugurated yesterday, well, he is the first pro-crypto president. And he's mentioned things that haven't been confirmed yet, but he said that it's possible in the first quarter of his presidency that the United States builds what's called a strategic Bitcoin reserve. Just like you have countries that sit on gold, well, he's talked about, and there's been proposals out there, the US buying about 1 million Bitcoin. And boy, you look at the supply of Bitcoin, the max supply is about 21 million. I mean, that would be that they are buying about 5% of the total supply of Bitcoin and then sitting on it for years. Think about how bullish that would be, meaning how helpful that would be for the price if that were to occur. And I think there's a decent chance that it does. If that happens, boy, all bets are off for where the price could go. You also have a new SEC chair in Paul Atkins, who is also pro crypto. Some of you following this stuff might remember Gary Gensler, who just resigned. He was very anti-crypto, made it very hard to get anything through. And him leaving and now being replaced by Paul Atkins is very bullish for the entire crypto market and for adoption and really seeing this catch on. The other big thing that occurred is it's really gone more mainstream, where it's much easier nowadays to access cryptocurrency. Beforehand, you used to have to go to a crypto exchange. Some people would go overseas to these exchanges where you could lose your shirt. You've heard of some of the nightmare stories that happened with FTX, where that ended up being a scam. People lost tons of money. It was an awful scenario. So one of the best exchanges is Coinbase, which is a US-based publicly traded company. But if you don't want to go and buy cryptocurrency at a crypto exchange and then potentially take self-custody of it, you can now buy it just like you could a stock. So if you're familiar with an ETF or an exchange traded fund, that is literally, you have ETFs that are for the S&P 500, right? You have SPX, you have SPY, and these are stocks essentially that you can invest in. Well, now they have them for Bitcoin, for Ethereum, and there's many other proposals out there with the SEC for other cryptocurrencies like XRP, like Solana. So now you can buy cryptocurrency just like you could a stock. Now, there's
By the way, Dan, I
Yes.
think that is a really important development that has occurred. As someone who personally got caught up and hurt by the shenanigans with FTX and Sam Bankman-Fried, I wish that this option would have been available, and I think this adds to perhaps some of the bullishness around it, is because a lot of people who may not be as savvy in taking custody of their coins or not as familiar with it now have a way that they can participate in this, and thus more buying through a very familiar way. You call your broker, you go online, you buy it. It's a very simple way to do it and participate in it directly.
It's a really good point that you make. And listen, most of the value, at least like let's say in the stock market, is owned by probably older traditional investors that maybe wouldn't be comfortable going to a crypto exchange, but now they can call their financial advisor and say, hey, allocate X% of my portfolio to crypto, to Bitcoin, to Ethereum. So it makes it much easier for people to get access to it. And obviously, that has been a big catalyst. The Bitcoin ETFs that we have seen, if you look at, I see people mentioning BlackRock is obviously behind this. They have IBIT. It is the best performing ETF by a large margin in history. It did what gold took like years and years and years to do within a very, very short period of time. So clearly a lot of demand out there for it. The other reason why Bitcoin, in my opinion, has really taken off, and we've seen the whole crypto market recover quite nicely, is because of the timing and specifically the supply situation with Bitcoin. So as we talked about, Bitcoin, only 21 million that can ever be created, but the supply coming to market every day into circulation, it gets cut in half every 4 years, and it's called the Bitcoin halving event. So back in 2009, there was 7,200 Bitcoin that would be mined and that would come into circulation every single day on average. 4 years later, in 2012, you had the halving event, where now that got cut from 7,200 to 3,600. In 2016, that got cut to 1,800 a day. 2020, 900 a day. And then just last year in April, the halving occurred, and now there's only 450 per day on average Bitcoin coming into circulation. And this is going to happen every 4 years until all of the supply of Bitcoin has been created and mined. So just think about it, putting it in mortgage and real estate terms. Imagine if builders said, every 4 years, we're going to build half the amount of homes we did previously. Clearly, you would have demand overwhelm supply, especially over time, and supply would get tighter and tighter and tighter. It's almost the opposite of what we're seeing in our fiat monetary system, where we continue to print money. This is almost like you're seeing a deflationary component here with the supply of Bitcoin. Now, how has Bitcoin performed since the halvings, right? So I just mentioned that one of the main reasons Bitcoin is moving higher is because this halving just occurred. Well, let's see some of the patterns, at least historically. And listen, history doesn't always repeat itself, but as Mark Twain says, it often rhymes. Let's see what has happened from previous halvings to their peak and what kind of a return was there for Bitcoin. So if we go back to this halving here in 2012 and we go up to the peak, you saw 9,715% return. Now, obviously, this was early on, and as you'll see, you do see a little bit of diminishing returns, meaning you're not going to see 9,715% return in each of these cycles. But boy, was that juicy. But one thing to note, after you saw this big run up, look at how much price corrected during the bear market. So really exciting monetary gain here, but then huge correction. When you see these corrections, it's not abnormal to see 70, 80, even 90% corrections, at least through some of these cycles. When you look to the next halving in 2016, from the time of the halving to the peak, you saw a 2,862% return. Now, I want you to take a look at some of these patterns that are evolving here, where obviously still a very exciting return, but this return, 2,862, is about 30% of the return of the previous cycle from the halving to the peak. Now, how about when we go to the next halving in 2020? Well, you saw from the halving to the peak, a 720% return. And again, 720 is about 30% of the previous return. And then how about this most recent halving that we saw in April of last year? At the time of the halving, the price of Bitcoin was around 60,000. Well, if we follow this same pattern and we see about 30% of the previous halvings return, you would see a 216% return. Well, what would that mean for the price of Bitcoin? It would mean 188,000 during this bull market cycle here. Now, listen, this is based on patterns, but I don't think that this would be a, unrealistic figure that could potentially be hit, especially if we see something like a strategic Bitcoin reserve that is built. Now, you might see some of these estimates out there from companies like ARK Invest, right? That's Cathie Wood's company, very big in the tech sector, very forward-looking. They released their forecast where, believe it or not, by 2030, they believe that the bear case for the price of Bitcoin is about $258,000 per coin. Right now, it's around $106,000 per coin, let's say. But then their base case is that over the next 5 years, you're going to see Bitcoin's price go up to 600 and let's call it 83,000. And then their bull case is almost 5 million per coin. Now, many people looked at this and said, yeah, you're out of your mind. But if you look at the way they get there, they really take a look at certain things having to happen. You need to have a lot of publicly traded companies adopting cryptocurrency and Bitcoin as a treasury asset, which means that instead of just having cash on their balance sheet, they invest in things like Bitcoin. And we're already starting to see companies do this. You've probably heard of Michael Saylor's company, MicroStrategy. Boy, they have bought a ton of Bitcoin and everybody thought he was crazy. And now he looks like a genius because of what's happened with the price of Bitcoin. You're seeing other companies start to copycat that. You're also seeing countries adopting Bitcoin, some of them as their currency. But you are also now seeing talks of the United States potentially building the strategic Bitcoin reserve. So these are just a couple examples of how they are getting to the price targets that they have here. But what once sounded crazy, you're already starting to see some of this develop. So I certainly think, boy, over the next 5 to 10 years, the price is going to be much higher, albeit there's going to be a lot of volatility, especially based on the developments that we're
And
seeing already.
and Dan, a lot of people are, rightfully so, saying, is there a utility for it? Is it really a store of value? It's just like anything else. It's a self-fulfilling prophecy. If enough people believe in it, then it's going to have a store of value that is going to be worthwhile. The thing for me that definitely makes the most sense is that you have the protection from a government doing things to completely devalue its currency. And, I don't know if you're going to be bringing this up as far as what's happened in the past, in places like, Venezuela and
Zimbabwe.
yeah, Zimbabwe and Germany and Hungary and all these places where money printing got out of control. And you could see to some extent where we put so much more money after what had happened with the pandemic and how it created inflation and caused buying power to decrease. I mean, these are things um, that are certainly worth contemplating. And Bitcoin theoretically, because it has, as you said earlier, a finite amount, it is not subject to that. It doesn't mean it's
Hmm.
not without risks and price fluctuation, which we are completely emphasizing here. This is just for educational purposes so people understand. But I think what really sunk in with me is that the fact that you do not have the ability for, you know, washing away your debts by printing money is a big benefit. Because think about how much indebtedness there is with many countries, including the United States, and it becomes very tempting to wash away your debts by
Hmm.
printing money. So these are
Yeah.
these are things that I just want to bring up as to all the concerns are valid, and there's certainly no guarantee. And you see these numbers, they're eye popping. Doesn't mean it's going to happen, certainly, but the reason that it may happen is due to the fact that it's a big hedge. And we think about things in the United States, but remember, Bitcoin is global. And there's a lot of countries where the trust and the faith in their government's fiat currency is a lot less than whatever the trust and faith is in the United States. And for many people, it's the only way to protect them. And that's why you see assets going there. It's not just people, it's corporations. So I just want to give a big picture, Dan, to people as
Hmm.
to what the landscape might be.
Yeah. And you even have countries like El Salvador who has adopted Bitcoin as pender. Now, listen, there's people that have talked about, oh, can you have Bitcoin in the United States replacing the dollar? I don't see that happening. One thing that's important to note is that right now, Bitcoin isn't exactly easy to use for transactions because if you're sitting on a big unrealized gain, meaning from when you bought the Bitcoin, it's moved much higher in price, and then you want to go ahead and use it for a transaction, you have to pay taxes on those gains. So you could end up paying more in tax than what the item is per se if you're buying something small. So that's why, at least for now, the way it's being treated from a tax perspective, it wouldn't necessarily make sense. But I saw some people mentioning here, where can I get it? What can I do as far as wallets go? Can I buy it on? How do you feel about buying it on PayPal? We're going to go through some of that stuff and what I think the best ways are to purchase it. So there's many ways now, as we talked about. You can buy it from crypto exchanges. If you're going to use a crypto exchange, I feel most comfortable with Coinbase. It is a U.S. publicly traded company, and a lot of these ETFs out there, like from BlackRock, are using Coinbase in facilitating this for them. So I would certainly feel safest with that one. But there, of course, are other options out there. Of course, now there's the spot exchange traded funds or ETFs where you can get exposure to some cryptocurrencies like Bitcoin and Ethereum. And some of those ETFs, if you want to know what they are for Bitcoin, there's, I think, around 20 now or so, but just some of the larger ones is IBIT, which is the BlackRock one. You have BITB, you have HODL, you have ARKS, which is ARKB. So these are just some of the spot ETFs that you can use to get access to Bitcoin. And there's certain stocks that you can buy that will give you exposure to the crypto space. Somebody I saw in chat mentioned like Riot. So listen, there's stocks that you can buy for companies that are mining Bitcoin. But there's also stocks like Coinbase, which is ticker coin, that will give you exposure to the overall crypto market, and MicroStrategy, where this is Michael Saylor's company, MSTR. Boy, this stock has been one of the best performing stocks over the last few years. And it is essentially a leveraged way of getting access to Bitcoin. They're raising money in very unique ways. And you have seen this thing just take off like a rocket ship. So you can get creative. There's a couple different ways that you can get access. Now, you also can buy it through Robinhood, through PayPal. There's a lot of different ways, but there are differences. Meaning, if you buy it as a stock in an ETF, that's one thing. If you buy it on Coinbase, you have the ability to take self-custody of your cryptocurrency, which can have benefits. It's not for everybody, because you could make a mistake. You could mess up, where if you forget your private key or your passphrase, or you forget the password to your device, your hardware wallet, boy, you can lose your crypto forever, and there's no recourse there. So you have to be careful. But as we'll go over here, there are some benefits. Now, my top holdings, and I'm going to share this with you again, it's not financial advice. I own a lot of different cryptos, but I'm not going to go through all of them. But just some of my favorites, just so you can see what my opinion is on it, is Bitcoin. By far, I have the largest percentage of my holdings in, but also significant holdings in Ethereum, XRP, and Solana. As I mentioned, I probably have about 20, but these are the largest concentration of investment that I wanted to share with you. And while we don't have time to go through every cryptocurrency out there, just to give you an idea of some of these different flavors and what they do, Ethereum is a network essentially, and it's a blockchain that allows developers to build and run a lot of different applications, or they call them dApps, or decentralized applications. This could be things like games, it could be advanced databases, it could be complex decentralized financial instruments. And again, it doesn't require a bank or any other institution in the middle. And one of the other things that Ethereum introduced was smart contracts. So, if you think about a regular paper contract, there are certain terms that have to be met in order for this contract to be executed. Well, smart contracts, it essentially establishes the terms of the arrangement between the parties, and it automatically executes when they are met without the need for anybody participating in this to know who's on the other side of the deal. And again, it's automatically done. So how do you buy Ethereum? Ethereum, while it's been underperforming Bitcoin, which we'll go into some charts in a little bit later, I do still think it's a very good cryptocurrency to potentially invest in. I think there's a lot of upside. Ways you can buy it is on a crypto exchange, or you can use some exchange traded funds or ETFs and purchase it like a stock. And some of the larger ones out there, you can see the tickers down here, ETHA, which is the BlackRock version of the Ethereum, as well as a few others here. So XRP is also another very popular cryptocurrency. It's actually the third largest now by market cap, and it was created to drive innovation across the financial payment space. So what it does is actually, it acts as a bridge currency. So it helps you to exchange different currencies without needing to convert it through multiple steps or high fees. So as an example, it could convert US dollars to euros almost instantaneously, and it really is good for international payment remittance. So it makes moving money across borders faster, cheaper, more efficient, especially when you compare it to the way that it's always been done, which is banks and wire transfers, which, as you know, internationally can take days. And it is the primary digital asset that Ripple, which is the parent company there, uses. And Ripple is, by the way, one of the largest crypto payment companies in the world. And this has not been confirmed yet, but this was just on Fox Business, so I wanted to bring it up because I thought it was interesting as XRP is setting new all-time highs. David Stryzewski, who's the CEO of Sound Planning Group, he said on Fox Business that Bank of America is using XRP for 100% of its internal transactions. Now, whether or not that's 100% accurate, they are definitely using it. And I think it just shows the adoption and how this is really catching on and being used for real world scenarios, making things more efficient, making things quicker and easier. And I think we'll just continue to see this adoption occur. So those are some of my favorites. And then Solana. Solana is another network, but it is really similar to, let's say, like an Ethereum network where it supports developers building decentralized apps. There's smart contracts, there's NFTs on here, there's DeFi, or DeFi is the abbreviation for decentralized finance platforms. You know, Solana, you just saw set a new all-time high in pop because the Trump meme coin and the Melania meme coin are both on the Solana network. So it got a big pop there. But what it's really known for, Solana, is its high speed. It could process thousands of transactions per second, which, comparing that to, let's say, the Ethereum or the Bitcoin blockchain, it is much, much faster. And they only cost a fraction of a cent. So it's very attractive for people that want to use Solana, who don't want to spend a lot on fees and want transactions done extremely quickly. How do you buy Solana? Well, same thing with XRP. So Solana and XRP, right now, you have to use a crypto exchange, or if you want to wait a bit, which, you know, listen, there's a lot of applications with the SEC, where the SEC, they haven't gotten approval yet, but there's been filings of these companies wanting to get a spot ETF for XRP as well as Solana. So just like you have the spot ETFs for Ethereum and Bitcoin, there's applications that have yet to be approved for these other cryptocurrencies. So how do you keep your crypto safe? Well, you have a few options, right? So number one, if you buy it on a crypto exchange, you could leave it on the exchange. But if you leave it on the exchange, let's say Coinbase, there is a third-party counter risk. Now, I think Coinbase is a safe exchange, but you've heard the stories, and Barry even mentioned he dealt with some of this about, if you invest in an overseas exchange like FTX, all those people lost all their money there, and it's because they left it on the exchange. So one of the beautiful things about cryptocurrency is that you can take self-custody, which means you could take it off the exchange and hold it yourself, essentially allowing it to just live in the blockchain, and then you have access to it through what's called a hardware wallet. Now, the one I use is called the Ledger Stacks. Previously, I had the Ledger Nano X, but you get this physical device, and then you can make sure to look up like what your receiving address is. You go to your Coinbase account or whatever exchange you're using, and you send it to that address, and then you receive it, and you can access it through your Ledger device. There's other companies out there that create hardware wallets as well. I'm just giving you an example, but you have to obviously know the password to get into that Ledger device in order to access your coins and send them anywhere. And then, just to be clear, once I'm, let's say, ready to take some profits or sell, I'm going to probably send it back to Coinbase and then sell it on the exchange into US dollars. I don't recommend doing the transactions on those Ledger devices themselves because I don't think the execution price is even close to as good, and I think the fees are much higher. But taking self-custody of the coins, first of all, there's no third-party counter risk. And there's also a backup 24-word phrase that you want to save, put it in a safe somewhere, because if you lose the Ledger device, your hardware wallet, you can always use that passphrase to get access to your coins anywhere in the world. But there's, of course, nightmare stories where people lost their Ledger device or forgot the password and they don't have the passphrase. And I just heard stories about somebody that had 1,000 Bitcoin on a Ledger device that they just can't get access to. So you do have to be careful. But one thing that I think is interesting is that there's other benefits if you take self-custody. So you can do what's called staking. So staking is essentially a consensus mechanism for a lot of different cryptocurrencies. Let's just say, for instance, you have Ethereum. So what you can do is lock your tokens in, and you could do this right on the Ledger device now. You can lock it in to help validate transactions and secure the network in exchange for rewards. So if you're not planning on selling your Ethereum, you can use staking and you can earn an additional yield. Now, you have to make sure to pay attention. There's certain lockup periods, right? It may be 60 days. It could vary, but you can earn 5% or so on your cryptocurrency that you own. There's other tokens out there that you can earn a much higher yield. And they've made it easy now right in the Ledger platform to go ahead and stake those coins. So that is a benefit that you have if you take self-custody of the coins. Of course, if it's a spot ETF or if you're buying it through PayPal or Robinhood, you're purchasing it, but you don't actually take self-custody of those coins. So there's pros and cons to each. By the way, I'm not a fan. I saw somebody ask about buying them on, let's say, like a PayPal or things of that nature, just because the execution price, again, is usually not favorable compared to what you could buy it on a crypto exchange. There's also something else you can do if you take self-custody. Now, you have to be careful because crypto prices are extremely volatile, but you can lend against the crypto. You can use it as collateral for a loan. There's many crypto companies out there that allow you to do this, but of course you have to be careful because it's a volatile asset. So if the price goes down, let's say in a bear market, boy, you can get margin called and get margin called quickly. Now, how does this all impact the mortgage space? Well, as I think many of you guys know, the income that's received in the form of cryptocurrencies, it's not eligible, at least in most cases, and at least for now, to qualify for a mortgage. And the assets that you hold in cryptocurrencies, they can't be considered for the necessary financial reserves required for mortgage approval. Now, I do think that over time, some of this may change, but there are even out there in some very small instances, crypto mortgages that are taking place. It's limited, but some companies like Milo offer them. Usually what you have to do is put 100% of the amount you want to borrow into an escrow account in, let's say, Bitcoin, and the home that you're buying also acts as collateral. And because you are over collateralizing this home, you in most cases don't have to put a down payment when you're doing a crypto mortgage. Now, in a lot of these cases, the credit and income are not considered. And the interest rates, I've seen it where it's higher. I've seen it where it's somewhat competitive with traditional lenders. And the company I mentioned as an example, Milo, they offer loans up to $5 million. But this is very, I think, beginning phases. Certainly is not, mainstream as far as mortgage lending goes. But I do think it's something interesting to follow because as we see adoption and more uses of this, I do think that we could see some of this regulatory stuff change and you could see it more widely adopted and used. And again, you have to be careful because cryptocurrency is very volatile. So if the value in this Milo mortgage, if the value of your crypto that you're using as collateral drops significantly, you can be asked to put more money up to make up the difference. And if you don't, well, they can liquidate what you've pledged without your permission. So have to be careful. I also want to talk with you briefly about how cryptocurrency could influence home values. We talked a little bit about this on our 2025 MBS Highway forecast. And of course, we talked about mortgage rates, which we think are going to be moving lower because of inflation moving lower, as well as weaker job growth and seeing the unemployment rate move up. We talked about demographics being in our favor as far as housing and how we think we're going to see around 4% to 4.5% appreciation nationwide for home values. But something else that I think is an X factor could be cryptocurrency. And there's already been a ton of wealth created. As I mentioned, a little over a year, you've seen $2 trillion of wealth. Just the last 60 days, about 1.6 trillion. But based on the projections that I showed you, I think there's an opportunity to see a lot more wealth created. And this would probably be the year that it would occur based on when the halving happened and historical tendencies. And according to Pew Research, they did a research paper, and they said people with crypto gains are 2 times more likely to spend it than gains from any other asset class. And I think there's going to be a lot of investors that may think to cash in and take profits from their digital assets in exchange for a more tangible asset like real estate. And the other big part here is that the majority of crypto is owned by younger adults. And those younger adults, those categories are in, like Gen Z, the home ownership rate is extremely low. So it would make sense that they may cash them in and purchase a home, especially because most of them are not homeowners. And if you just take a look at how many adults own crypto, if you look at everybody, it's 17%. But the biggest cohort is those aged 18 to 29, where 29%, almost a third of them, own cryptocurrency. And then the next largest is your millennials here, where it's 25%. But the home ownership rate for Gen Z is 8%. So again, some more supporting detail on why they may go ahead and cash in those digital assets for some tangible real estate. And if you see that occur, obviously that can help with demand and driving home values higher. And I also saw this article just today from Redfin. They said that 1 in 9 first-time home buyers, now this goes back a few years, but surveyed in late 2021, had cashed in on crypto assets to cover down payment needs. Now, the reason why 2021 is interesting is you can see from 2019 to 2020 to 2021 how that's increased. Well, 2021 was 4 years ago. That was the last crypto bull market. Now we've seen new all-time highs. We've seen even more wealth created. I think you could see these numbers going up, up, up. But people not only maybe using crypto to purchase the home, but for down payments, I think you're going to see this in larger and larger numbers and help people come up with the cash that they need.
And then
Now,
just a quick clarification point there. That doesn't mean that they're using crypto itself. They're taking their crypto
correct.
gains, they're liquidating them, and they're using that, they're cashing that in and using it as a down payment.
Yep, and I do see some people talking about a taxable event if you sell your crypto. Listen, that is true. Just like if you had your stock portfolio and you did really well, and then you sold some of your investments in stocks to pay for the down payment or help you buy the home, it's similar to that. However, same principles apply here, where if you've owned it for less than a year, you're going to get taxed at ordinary income. If you own it for longer than a year, well, then it's long-term capital gains, which instead of ordinary income is around 20% that you would be taxed. So, yes, that is 100% true. Something else that's interesting, which they haven't really changed the law on yet, is that you can do some tax harvesting with cryptocurrency. Now, you wouldn't do it now because we're at all-time highs on Bitcoin. But if we go back to the last bear market, you had Bitcoin come down to 15,000 and change per coin. Well, with crypto, there's no wash sale rule. I'm sure this is eventually going to get changed. But the wash sale rule is this. Let's say you own a stock, and all of a sudden the stock plummets, but you still want to hold the stock. Well, if you sell it to try to lock in a loss, you have to wait 30 days to purchase it back. Otherwise, you can't claim that loss, because obviously if you sell it and buy it instantaneously, that was your intention all along. You can't lock in the loss. With crypto, there is no wash sale rule. So a lot of people did what's called tax loss harvesting, where they owned Bitcoin or a cryptocurrency. When it moved down, they sold it and bought it back instantly, and then they were able to use that loss against their taxable income. I do think that's probably eventually going to be changed, but to my knowledge, it hasn't yet. But that's something also that's different with cryptocurrency. But 100%, if you're selling it to use it for anything, there is going to be a taxable event. Barry, one other thing that I just wanted to mention, this is a very volatile and sometimes, confusing space that you have to be careful in, but I think it has probably the best asymmetrical return out there compared to other investment classes. But as you can see with the charts and stuff that I shared earlier, it is important, unless you're going to hold this for, let's say, 10 years, in which case I think that through all the volatility, it's going to be higher. There's an impetus to try to cash in and take profits before the inevitable bear market that we've seen in every other market cycle, because you could see some really huge corrections, 70, 80, even 90% corrections. So I think it's important to be plugged in and to have an understanding of this stuff. And one project that I'm involved in as kind of like a passion project, where I do share some insights in on a weekly basis, is called Crypto Charged. And that's something that you can go to cryptocharge.com. You can check it out. But what we do there is daily videos helping to break down the crypto market, how some of the macro stuff might influence crypto, talk about different coins. We give you a coin library to help you break down all the different coins out there and what they actually do, what the market cap is, what the risk is. We give you entry and exit points, technical analysis on all of these different coins. So wanted to give you guys a chance, if you were interested, to check it out for free, where it's normally $100 a month or $1,000 a year. But for MBS Highway members, you can go to cryptocharge.com and use the code HIGHWAY. And if you do, it gives you 30 days free. And then if you do decide you'll want to stick with it and you get value from it, great. You get half off, where it's $49 a month or $4.99 a year. And one other thing that people really like is the community aspect. If you're familiar with Discord, that is a great spot for communities, especially for cryptocurrency. You can join the crypto community there in under Crypto Charged and interact with the members. You can ask questions and get answers in real time. So that's also very valuable. And, Barry, one other thing that I was just going to share here was some technical analysis. Now, this is going to be, just based on some Fibonacci, retracements as well as extensions, which a lot of people use for targets for cryptocurrency. On those top 4 assets that I showed you that I hold, Bitcoin, Ethereum, XRP, Solana, what some of the price targets are out there based on some of these Fibonacci levels. So if we were to just look at at Bitcoin first, you could see here Bitcoin in the previous market cycle back in 2021, it hit 69,000. It came all the way down to 15,000. So using that as your Fibonacci range, well, you could see, first of all, today hitting a this week hitting a new all-time high. But in the crypto world, a lot of people look at these extensions on the Fibonacci range. And the next target, the 2.618 extension, would be 155,000, which I think is a realistic target in my humble opinion during this market cycle. The next level after that is a little over 200,000. And boy, if Trump does build the strategic Bitcoin reserve, I think that that's possible as well, but no financial advice or guarantees, just my personal opinion. If we take a look at Ethereum has been underperforming Bitcoin. And, a great way to look at that is, we're talking about currencies here, right? So you can look at a currency pair. Instead of Ethereum in dollars, you can look at Ethereum in Bitcoin and just look at how much this has been going down, which means on a relative basis, Bitcoin has been performing much better than Ethereum. Well, at least what I've seen pattern-wise and historically, when you see this occur for a long period of time, it looks like Ethereum on a relative basis is due to have a bounce back. And I actually think that because it's been underperforming so much, relatively speaking, that it's potentially a very good option to see a good return currently. But if we just look at Ethereum and the last all-time high that we saw in 2021 was just under 4,900 per coin. Right now, we're sitting at 3,354. Again, doing a Fibonacci range, the next target would be around 7,000 per coin, and the one after that would be around 11,000. Obviously, those would be some huge gains there. And then if you look at XRP, well, XRP is currently setting all-time highs. The previous all-time high was 331, 332. That's $3.32. We recently just set a new all-time high around $3.40. However, I think that we could see this thing, especially with the adoption we're seeing in the remittance space with Bank of America during this bull market. I think you could certainly see it come up towards $5, which would be like the first target here. Remember, with all of these, you're in price discovery mode. So, without using Fibonacci extensions and stuff, there's not really much you can do on a technical analysis basis because right now we're at uncharted territory in a lot of these different assets. And then a lot of people that are big XRP fans, and Matt, who also works at Crypto Charge, it's his biggest holding. He thinks this cycle we're going to see it go towards 8.5 towards $10 or so is what his target is. And then Solana, which I also think is one of the better ones out there. This recently just set a new all-time high around 296 or so per coin. Previously was 260, but I think you could see this thing going up north of $400. So those are just some technical analysis targets. Again, no guarantees, but this is a very exciting time for the crypto market because at least historically, this is where you see the big parabolic runs occur that year after the halving, which we saw in April of 2024. And, we're seeing a much friendlier regulatory environment, much easier access to these cryptocurrencies. So I think it's certainly something that you want to be, like any other investment, careful with, cautious, and, you want to be responsible. Don't sell all your, your assets and your home and put it all in Bitcoin, right? But it is risky, and it's not abnormal during bull market runs to see 30% corrections, and that's the norm. Also, you could see 10% corrections in a day, but the upside there with that risk, I think, is something that can be very attractive.
Well, Dan, so first of all, I'm very proud of you, son, and I'll tell people here that just privately, Dan, you have mentioned to me on several occasions where you see some buying opportunities, and you've been really spot on. You've been really spot on those where you thought it might come down to. What's a good entry point that you could see? Let's just take Bitcoin for a minute here. What's a good entry point that you could see here? We're looking at it 107,000 roughly now, 106.9. If somebody wanted to get in, where's a good buying
Yeah,
opportunity?
I mean, recently we had come down to like 89,000, which was one of the targets that I had mentioned that I thought was a good opportunity. Obviously, now we're kind of back up on the rise. So the way I advise people to get involved is this, because so many people are like, it's now at an all-time high. I missed the boat. It's too late to invest, and I completely understand that train of thought. But what if it never does come back down to a level that you're waiting on? Then you don't get exposure. And based on the forecast, at least what I think and shared, I think it's still going to go a lot higher. So what I recommend doing and what I personally do is I DCA, or dollar cost average. So what that means is that no matter what the price is, it's a volatile asset. It's always going to be changing. Twice a month, I'm buying a small amount of Bitcoin. And that just ensures that I'm continually getting access in a way that's not felt too much. But then if it does come down and hit certain levels, those are opportunities I think that you can load up a larger amount. Now, some targets of this, no guarantee it's going to hit these, okay, but 89,000. If we look at when Bitcoin kind of broke out, that was right around 73, 74,000. That's a level that has not been back tested. Now, Barry, you know that doesn't have to be back tested, but oftentimes that breakout
Usually
during this
does.
run, it usually does get tested, right? So that would be, I think, a really great opportunity somewhere in the $74,000 range, and then 89,000. And then I would recommend, just in case you see Trump announce something or it doesn't back test that, which it would be unusual if it didn't, but I would, if you want exposure, I would dollar cost average in or buy a little bit at a time and continually to get exposure, because I think the sky's the limit over the next 10 years, right? Most people aren't day trading, they are buying and holding. And I think that, over any 4-year period, you've never really lost money in Bitcoin. But,
So,
so
so Dan, so again, just a beautiful job here. You've taken something that's pretty complex and broken it down in a way that I think is pretty easy to understand for people. I just want to compliment you on doing just an incredibly good job on that, and I'm very proud of you, son.
well,
Uh,
thanks.
this is something that people want to understand. There's not a lot out there that makes it easy to understand. A lot of people talk at a very, very high level about it, and while you could certainly do that, your ability to make this easy to understand for everyone, whether you're someone that's very experienced or just kind of very new to it, I think you've done a great job of that. Once again, we want to reiterate to everyone, this is a highly volatile and very risky asset. Dan said it many times during the call. I just want to reiterate this here at the end, that please be very careful. There's no guarantees. We do not know what is going to happen. Okay, we don't know. This could hit some of those targets and they seem juicy and this and that. But goodness, I've been around long enough to know that, these markets, they seem to do the most harm to the most people at the worst time. Okay, that's just typically the way markets work. So you have to be extraordinarily careful and cautious, and do not try to invest money that you cannot afford to lose. We are just telling you with a lot of love here in our hearts for you, and we're only trying to just share information with you. We don't, we don't want anyone to be in a position where it causes them a hardship. We just want to try and bring good to you guys, nothing
Yeah.
more. Okay.
That's a very great point that you bring up. Listen, don't look at, opportunities in this as like I'm going to try to get rich fast. I would always look at it from a responsible point of view of, hey, let's plan for a long-term investment strategy here and have this be like any, responsible financial advisor, a sliver or a part of your investment plan, right? You got your stocks, your bonds, your, alternatives. You have your cryptocurrency as a sliver or portion of the pie. But certainly don't want to put everything in it, because as we've seen many times, you can see the bottom fall out of this. There has also been a high correlation, at least so far, to the stock market. And boy, a lot of stocks are expensive right now, right? So even though history shows us that during this period of time, you keep seeing it go up, you have to be careful. And I just saw one other question, Barry. Somebody had asked about, can you short it? So listen, this is something that you really need to have caution on, because crypto is like the most volatile asset. And then by doing leverage and, using futures and longing it or shorting it, meaning betting on the price of it to go up or down, well, that's even intensifying that further. And you have to be careful with your liquidation points, depending on how much leverage you're using. But to answer your question, you can. It used to be a lot easier, but now a lot of these other exchanges like KuCoin and such that used to provide it, they make you do a KYC or a know your customer, and they don't let you do it if you're in the United States. Some people use, ExpressVPN and such, but you got to be careful. But there are now some limited futures on even Coinbase that you can utilize. However, they have an expiration, so it's not a perpetual contract. And I might be talking a little bit to a confusing level for some here, but you can explore it and learn about it on Coinbase. There's an expiration, but you can use some leverage and long or short it. And some people are successful with that. Some people can really get burned. But if you don't want to sell your crypto, but you think that price in the interim might be coming down, you could short it temporarily and then buy it back. So just options.
Well, thanks everyone. Thanks for joining us today. Megan, I'll let you take us home, but I just want to give a personal thanks to quite a few of you who have joined today. Well over I think it's like 1,500 of you that joined today. So thank you so much. We appreciate you guys very much. We're trying to bring you as much good information as we can.
Yes, I went ahead and I put the link in the chat box again. Be sure that you guys use code Highway on checkout, and you can use whatever email you want to use associated with that account when signing up. And Dan, I think you were going to say something.
I was just going to say thank you guys all for joining. I appreciate you. We appreciate you at Highway. Hopefully this was, a quick kind of informative course. There's a lot that we could dive into, but thank you guys for some of the nice comments here. Appreciate you.